Hello traders, you're welcome to the Forex Geek channel, and I specifically welcome you to this video. You are welcome. So in this video, basically we are going to be discussing a critical technical formation known as the bearish triangle pattern. You might have come across the bearish triangle pattern before. It's possible that you did not even know what it was when you came across it if you are a newbie, but if you are an experienced trader, then of course you probably know what the bearish triangle pattern is. Whatever the case may be, we are going to be discussing this pattern in this video. So this pattern is crucial for understanding market dynamics, all right? Especially when you are trying to gauge potential price movements. So if you are ready to unlock the secrets of this powerful trading tool, make sure to stay till the end of this video so that you don't miss out on even the tiniest detail, okay? And don't forget to hit that like button and subscribe for more trading insights. Thank you. Now let us start with the basics, okay? What exactly is the bearish triangle pattern? Now in technical analysis, this pattern typically forms during a downtrend, all right? Now let us just look for a downtrend so that as we are explaining it, we can be looking at the charts and interpreting whatever we need to interpret on the go. All right. So now this is an example of a downtrend. Of course, downtrend is formed by continuous lower highs and lower lows. So we can see this is a downtrend. Okay. So bearish triangle pattern, yeah, they typically form during a downtrend. All right, when the price action is narrowing and creating converging triangles. Now this is a channel, okay? A channel is different from a triangle. Of course, you know how a triangle looks like. Bearish triangle, as the name implies, is when the price is ranging in such a way that it is creating a triangular pattern. Okay, it is creating a triangular pattern that is going in the downward direction. So as the price moves closer together, traders often refer to this as a triangle due to its shape on the chart. So let us see if we can find a bearish triangular pattern on this chart, okay, so that we will be able to understand what we are talking about. Okay. All right, so we can see now we had a bearish triangular pattern here. Can you see that we had the price forming lower highs? This is a downward move, right? It's a downward move. This is a descending triangle. We can see that this is a downward move as price was forming lower highs, right? Price was forming lower highs. The price was ranging. You can see the price is ranging within this zone, but in the downward direction, okay? And then we have the lines converging at this point, all right? So the bearish triangle pattern indicates that sellers are in control, but they are running out of steam, which usually leads to a breakout to the downside. Okay. Now this pattern often signals that the price is likely to continue its downward movement, making it an essential tool for any trader looking to capitalize on market trends. Okay. Now this is actually more of a descending triangle. Let us see if we can have something that is much closer to a bearish triangle formed by two trend lines, not necessarily a trend line and a horizontal support or resistance line. So I'm looking for such where we have two converging trend lines. Looking for such where we have two converging trend lines. Okay, I think, no, this is not it, this is not it, this is not it. Okay, I think we can call this 1, right? We can call this 1 because these are trend lines, right? This is not horizontal, this is a trend line. Okay, you can see there was a rejection here, there was a rejection here, and there was a rejection here, right? And you can see that both of them are going towards a convergence, right? So eventually they are going to converge at some point. So we have a bearish triangle pattern here. So this is actually more of a bearish triangle pattern. The other was more of a descending triangle. Okay, so we have a couple of triangle patterns, right? So now, most of the times when you have this formation, you might eventually find price breaking in the downward direction, right? Most of the times you might find a bearish breakout after the consolidation. Okay, so now that we have a general understanding of what the bearish triangle pattern is, let's discuss its key characteristics. Now, first of all, there must be converging trend lines. Okay, the most distinct feature is the two converging trend lines. One is a downward sloping line connecting the highs, while the other is we have another line that connects the lows. Okay, the first line must be downward sloping, right? The second one may not even slope as much as the first. Okay, it may not necessarily slope as much as the first, because as you can see in this situation, you can't even compare the slope of this to this. And on a second note, this is also a bearish triangle pattern, because really this is bearish, right? This is actually a bearish triangle pattern. Okay, so you could actually have a breakout in the upward direction or in the downward direction, just like this. There could be a breakout in the upward direction or in the downward direction, right? We even had a false breakout here. We had a false breakout here. So when you are looking to identify a bearish triangle pattern, the first thing you should be looking at, the very first thing, is those converging trend lines, okay? Or basically those converging lines. The reason why I said converging lines may not necessarily be trend lines is because it could be a horizontal support line. Okay, you could have a horizontal support line and a downward sloping trend line on the top. Okay, just like we had here. So this is also called a bearish triangle pattern. And one of the ways that traders use this pattern is they watch out for breakouts. Okay, you can decide to trade the range. If you are trading the range, it means you either are entering sell opportunities after price bounces off the trend line, or you're entering you are looking for sell opportunities when price is bouncing off the trend line, or you're looking for buy opportunities when price is bouncing off the horizontal support. Or in the case of this, you are either looking for sell opportunities when price is bouncing off the upper trend line, or you're looking for buy opportunities when price is bouncing off the lower trend line. Note, I said bouncing off, so you should notice a pullback or a reversal candlestick pattern. Okay, because you can see in this situation there was no reversal candlestick pattern because there was an actual breakout. So you should always watch out for that reversal candlestick pattern, okay, before you decide to enter the trade. All right, it's actually very important. All right, now secondly, you should be looking out for volume. Okay, a characteristic of the bearish triangle pattern is that as the pattern develops, you will often notice a decrease in trading volume. All right. So when you have a decrease in trading volume, let us add on the volume indicator. The volume indicator is going to come in handy here. So when you have a decrease in trading volume, you can see that around this point, you can see around, let me just mark it with a rectangle. So you can see that around this point, when we are having the formation of this pattern, can you see the volumes compared to what we have here, compared to what we have here? You can see that these ones we are quite, lower, right? So during the formation of this pattern, you might notice a decrease in trading volume. Okay, so we can see in this situation, we can see that at some point we had some decreased volume here, we had some decreased volume here. Okay, now it doesn't mean that you might not momentarily see some, volume spikes. Maybe if there was high volume within the consolidation, you might actually see some volume spikes. If there was high volume, maybe a particular candlestick had, high volume, you can actually see a volume spike. But basically, most of the volume bars might, be moderately decreasing. All right. Now, that indicates that the market participants are becoming less active, okay, which can lead to an explosive breakout in either direction. However, in the case of a bearish triangle, we are focused on the downside, okay, we are focused on the downside. Another thing to look out for is breakout confirmation. So for the pattern to be confirmed, the price must break below the lower trend line with significant momentum, like what we had here. Okay, you can see that the breakout happened, and then we even had a retest, although this retest stubbornly entered back into the channel before the breakout continued. So traders often look for strong volume to consider this breakout, right? So you can see that at the point of this breakout, can you see that towards the breakout point, you can see this little spike in volume. It was not too much, but there was just a little spike just before the breakout happened. Okay, those strong volume signifies that the sellers have taken control. Now let's talk about how to identify the bearish triangle pattern on your charts. So just for easier identification, a step-by-step guide includes that you should look for a downtrend. The bearish triangle pattern typically forms after a preceding downtrend. Okay. Now this context is crucial because it sets the stage for the pattern's bearish implications. All right. Then you have to draw the trend lines. As you observe the price action, start drawing your trend lines. Okay. You draw your trend lines after you have observed the price action. All right. Now connect the recent lower highs with a downward sloping line, just as we did here. You need to connect the lower highs with a downward sloping line, and then the lower lows, you connect them as well. All right, this will help you visualize the triangle formation. Now, the next thing for you to do is to watch for any signs of indecision or tightening price movement. Okay, then you wait for the breakout. As the price approaches the lower trend line, prepare for the potential breakout. Look for a decisive move below this line, okay? Preferably accompanied by increased volume to validate the pattern. So how can you effectively trade the bearish triangle pattern once you've identified it? A few strategies to consider include, once the price breaks below the lower trend line, you can enter a short position. It's often wise to wait for a retest of the trend line, ideally, just like what happened here, before entering, as this can provide a better risk to reward ratio. So once we have confirmed this breakout and this retest, then we can enter here, okay? And then we have to set our stop loss above the breakout point, right? We have to set our stop loss above. Actually, there should even be a retest around here because we can see this bullish candle. There was a retest. It's just that the retest didn't exactly get to the breakout point, but this can also be considered a retest, right? So after this retest, we could have even entered our sell trade. All right, we could have even entered our sell trade here and then set a stop loss above the breakout level, and then take profit can literally be at the nearest support zone. Okay, to manage risk, always place a stop loss order. It's important to use stop loss orders. Okay, you can also place stop loss order above the recent swing high, which would have been above here. Okay, this helps protect your capital in case the market goes against your position. Now, also when setting profit targets, traders often look at the height of the triangle at its widest point and project that distance down from the breakout point. Okay, this method can give you a reasonable expectation of how far the price might move following the breakout, or you can just decide to use the nearest support level as you take profits as well. And then some traders also incorporate additional technical indicators to confirm their analysis. For example, you might use moving averages or momentum indicators to strengthen your decision-making process, while the volume indicator can just help you to identify volume spikes. Okay. Now, as we wrap up our discussion, let's highlight a few common mistakes to avoid when trading the bearish triangle pattern. The first is ignoring volume. One of the most significant mistakes is not considering volume. A breakout on low volume can lead to false signals. Okay? And you wouldn't want to be caught in a false signal. So ensure that you are confirming breakouts with increased trading activity. Secondly, rushing to trade. It can be tempting to jump into a trade as soon as you spot the pattern. However, patience is crucial. Wait for clear confirmation before entering any position. All right? Now, thirdly, not having a plan. Always have a trading plan in place. Know your entry and exit points and stick to your risk management strategy. Please and please, it's very important. And there you have it, a comprehensive look at how to identify and trade the bearish triangle pattern. Remember, mastering this pattern takes practice, so don't be discouraged, okay, if you don't get it right immediately. Keep analyzing the charts and refining your strategies. If you found this video helpful, please give us a thumbs up and don't forget to subscribe to our channel for more trading tips and insights. Share your thoughts or questions in the comments below. I would love to hear about your experiences with the bearish triangle pattern. Thanks for watching and happy trading.